Gigafactories are out, data centres are in, as the battery business reshapes real estate. If the electric vehicle revolution has stalled, does that mean a go slow for green economic regeneration in the north? I'm David Thame, analysis editor at Place North. In today's Place podcast, we'll look at the way power supply is fuelling property development. We'll also celebrate a good first quarter in the Leeds office market and say howdy to techs and investors in Newcastle build-to-rent. Monday saw the no-going-back termination of plans for an electric battery gigafactory at a site in Northumberland. Gigafactories being the massive places required to produce electric vehicle batteries at a scale that makes economic sense. The receivers, the Law of Property Act receivers for the property assets of BritishVolt Properties, who'd been trying to build a gigafactory there, agreed a contract for the sale of the 235-acre former power station site at Blythe, Northumberland, to QTS, the data centre subsidiary of US private equity giant Blackstone Group. The site's proximity to massive power supplies made it super appealing as a data centre. The data centres, in this case, being vast, electricity-hungry palaces within which the internet lives. Basically, cloud computing depends on them. The sale snatches victory from the jaws of electric vehicle defeat for Northumberland County Council, who were involved to ensure the future use of the site aligned with regional development plans and the region's employment strategy. It could house a 750 megawatt facility, which would be Europe's largest. A well-funded owner will surely turn the site to economic account and perhaps kick off something much bigger. There's some aspiration that it could kickstart an entire tech industry cluster in the northeast. The difficulty is that a site intended as a green investment, if you think electric vehicles are ultimately accomplishing that end, a site that was intended to be a green investment ends up doing more or less the opposite, because there's not a lot that's green about energy-guzzling data centres. Moreover, building such a vast complex is a long way from carbon neutral, and operating it not much better. Only a few weeks ago, the boss of the UK National Grid warned that data centres will demand 600% more power by 2034. Now, it's already gone up 400% since 2014. Power requirements for data centres are truly staggering, accounting for perhaps a fifth of all electricity consumption. It risks frying our power grid if we send too much power down too small wires. That power grid is well past retirement age. Green or not, data centres are currently very big news thanks to the growth of cloud computing. Operators like QTS are happy to pay top dollar for sites with top-notch power connections. Blythe reports suggest a 20 million land deal plus 110 million once the thing is up and running, so that's serious money. A rash of proposals have appeared across the north, many of them colonising industrial sites or former power stations. For instance, Microsoft have put their mark on the former Eggborough power station in North Yorkshire after talks with landlords the St Francis Group. The site between Hull and Leeds could be functioning by 2027, and we should be looking out for a planning application very soon. There are smaller proposals too in Reddish. There are proposals for a 280,000 square foot building on a 10-acre plot, a project valued at about 350 million, and there are others in Rotherham and Blackpool and elsewhere. Will there be more? You bet there will, as research by CBRE shows. For the second year in a row, demand exceeded new supply in the European markets. The main European markets are London, Frankfurt, Paris, Amsterdam. Confusingly for property people, these things are measured in power capacity rather than floor area. So the last quarter of 2023 saw take-up of 601 megawatts, but new supply of only 561 megawatts. If we bear in mind that the Blythe proposal was for 750 megawatts, then the true scale of that project becomes clear. As a side note, it's worth pointing out that outside the big cities, the vacancy rate for data centres is fairly high. It's about 19%. So development won't come at such breakneck speed as it does in London. Whilst the data centre plans accumulate, maybe it's time to check on that electric vehicle revolution. In the last few days, Tesla shed 14,000 jobs amidst rumours it's abandoned plans for a lower price mass market vehicle. Without lower priced models, growth in the EV sector is never going to get anywhere near a point where it becomes a serious paying proposition. Whilst BMW is doing okay with its EV models, everyone else is having a torrid time. Sales growth is either slowing or going into reverse. And it's no surprise that official estimates have been rowing back on EV adoption in the UK. Sales are expected to halve this year, according to government budgetary estimates. The government has responded by nudging the ban on petrol vehicles back from 2030 to 2035. Even that seems optimistic given the lack of a charging infrastructure that can cope with the vast number of vehicles involved, or a power grid capable of delivering electricity where it's needed on the scale required. Maybe Gigafactories will work in the UK somewhere, someday. A Chinese manufacturer is reported to be in talks involving a 5.7 million square foot facility in Coventry, whilst JLR owner Tata said last year it would open a battery factory down the road from a new nuclear power station in Somerset. So far, nothing has been built. And now your weekly rundown of what's going up and what's heading the other way in the Place North elevator. Doors closing, going up. Last year ended on a relatively quiet note in the big regional office markets. The final quarter was steady rather than roaring after a hold steady kind of year. In Leeds, take-up in 2023 was 5% up on 2022. That's the kind of level at which the change is more or less accidental. The question was, will 2024 mean more of the same, hold steady, or a change in pace? We've now got the Leeds first quarter of 2024 figures, and the answer appears to be a change in pace. The first 3 months of the year, Leeds take-up rose. It was 249,700 square feet. That's a stonking 122% up on the last quarter of 2023. A sharp rise in the average transaction size was responsible. So there have been some huge deals in recent terms. 25,000 square feet taken by Ernst & Young, EY, at Wellington Place, and a big tech deal at Bruntwood Sitex West Village. That was about 38,000 square feet. Rents are holding up well, with a plurality of deals now at rents over £30 a square foot, which is quite a milestone. Supply constraints are going to mean the coming year could be a winner. Texan investment giant Hines has taken the plunge into the Newcastle build-to-rent housing sector. Hines European Property Partners is going to back Olympian Homes, who have a 519-unit development at Pottery Lane, Newcastle, part of the Fourth Yards regeneration. The site has all the usual selling points. It's close to the right kind of techie jobs and to the city, and will appeal to the usual gym-loving urban demographic. So far, so yawningly unremarkable. The interesting thing is that Hines chose to fill its big Texan boots with Newcastle built-to-rent flats. Until very recently, Newcastle was a second division BTR player. Jones Lang LaSalle JLL placed it 14th in their UK rankings. And Hines had difficulty seeing the UK regions as investment prospects. They literally escaped notice because the capital values were too small. A big rethink has taken place since then, and Newcastle feels like an early stage market in which a well-funded investor could do very nicely indeed. Strawberry Place, the £145 million BTR scheme next to United St James's Park Stadium, is now back on thanks to a £250 million deal with Homes England, and that shows the way things are moving. They're going up. And that's it for this week. We've seen how the struggle of the electric vehicle business has opened up an opportunity for the data centre business, but that may be a less green option. How Leeds' office market is on an uptick, and how investors in big cowboy boots want to fill them with Newcastle residential investment. For more about the built environment in the north, visit placenorth.co.uk. I'm David Thame, and thank you for listening.